Let's take a look at where the Taiwan dollar is sitting right now. We're sitting at 32.72, virtually unchanged. But this currency has been making very strong gains since early March, which, of course, has in turn made the Taiwan exports less competitive. Indeed, we're sitting around a 5-month high for the Taiwan dollar. Well, this will also weigh on Taiwan's first quarter GDP numbers when they're coming out later on today. Analysts say the export-dependent economy is likely to have contracted by a record 9.2% from a year earlier. But Reuters is also reporting that sources close to the government say the economy likely shrank close to 10%. Any decline recorded today would be the island's third straight quarterly GDP contraction. Daniel So is regional economist and forex strategist at Forecast, joining us from our studios in Singapore. Daniel, what are your forecasts for the GDP in Taiwan, and what will it tell us about the economy?
Of course, the government sources are correct. I think the forecast will be around, the Taiwan economy will contract around minus 9.9 in the first quarter, according to my forecast, and this will be the record low, and in our opinion, this may also be the worst for the Taiwan economy. Because yes.
Going forward, do you think that we'll see the contractions in the Taiwanese economy start to narrow? Could this be perhaps the worst reading and then things might start to get better?
Yes, but for the second quarter, because Taiwan economy follows very closely to the global environment, which is a trade reliance economy, and the worst thing right now is that apart from the slumping global demand, and the domestic demand has trumped. If you look at the private investment, if you look at the gross capital formation, if you look at the private consumption, and even if you look at the imports of consumer goods, all this show that the domestic demand is spiraling downwards. And in other words, the recovery may not be so soon, but I would say that the Taiwan economy may not worsen further because of some positive signs in the global tech environment and in the inventory downward pressure. All this will see that some ramp up, some recovery in terms of production and investment. So, but the second quarter we'll see also pace of decline will be similar to close to the first quarter, but there will be due to the base effect and due to some recovery, because if you look at Taiwan effective exchange rate, though there have been talks about Taiwan dollar strengthening a lot, but the real effective exchange rate actually fell 5.1% year to date in 2009, and is one of the worst performer in terms of the Asian currency. So in other words, if you look at the basket of currency, the Taiwan dollar is still falling, and if you compare to February 2002, yes, when the dollar peaked, the Taiwan exchange rate is actually the most competitive, even more competitive than South Korea right now. So all this thing means that when the demand return, global demand return, Taiwan export may see some strong rebound because of a competitive exchange rate.
It's got a competitive edge because of the exchange rate. Indeed, just yesterday, TSMC was saying that they think they've seen the worst for the company. How much of a bellwether do you think for the entire Taiwanese tech sector TSMC is, and how much do you think what they're saying is indicative of what's happening across the sector?
Yeah, I think this is quite true, because I recently noted some positive signs, some positive comments even from chip sector like Hynix in South Korea, that the global demand and supply tech imbalances are actually easing. And as I mentioned earlier, the downward pressure on inventory and the sharp contraction in Taiwan investment, all this shows that the global tech bubble, the global tech slump, I would say, has been the order has been underperforming the sales for near 2 years, and it has been, the decline has been exacerbated by the global crisis. So all this signal that the worst, in other words, for
Daniel,
yes.
I got to jump in here, otherwise the ad break will. Good to have you on the show as always, and thank you for your predictions. Daniel So, regional economist at Forecast. We'll be back in 2. Stay with us on CNBC's Cash Flow.